Let's keep it going with markets. Now, is the global economy ignoring a looming crisis? Even as oil prices surge and energy risks intensify, markets are continuing their upward march. The S&P 500 has hit record highs, but economists warn that the optimism may be misplaced. With inflation pressures rising and growth slowing, concerns are mounting that a day of reckoning may not be very far. Take a look at this next report for more.
Global markets are flashing mixed signals. On one hand, the S&P 500 has surged to a record high, signaling strong investor confidence. But beneath the surface, a sharp energy shock is building. Oil prices have jumped over 50% since late February, driven by escalating tensions in the Gulf. Fuel prices are already impacting global inflation outlooks, with IMF flagging rising risks compared to previous oil shocks.
Today's shock echoes the 2022 commodity price surge. Then, central banks delivered a successful disinflation without a recession. Can we expect the same outcome now? There are reasons to doubt it. In 2022, inflation pressures were already elevated by post-pandemic support policies. Today, underlying demand pressures have eased, though inflation remains above target in some countries, notably the United States. If the shock remains modest, inflation may be more contained, consistent with our reference scenario.
Despite this, equity markets continue to rally, a disconnect that analysts warn may not last. Energy experts say markets are underestimating the scale of disruption, especially as supply risks persist around key transit routes like the Strait of Hormuz.
Well, I think we're just seeing the continuation of this AI trade and maybe the complete ignoring of some of the other red flags that are out there. Higher oil prices leading to higher inflation, many other things that might give investors pause. But we're coming through a good earnings season, particularly for some of these tech companies. And investors are, I guess, saying it's still time to buy there.
The bigger concern is the cascading impact of higher energy prices. Analysts warn that the world could be heading into a massive energy crisis if supply disruptions continue. A prolonged blockage could force demand cuts of up to 10 million barrels per day, a significant shock to global consumption. This also has wider implications from LNG to fertilizers. Rising input costs are likely to push up food prices and strain global supply chains. At the same time, sectors like aviation, manufacturing, and transportation are already feeling the pressure from rising fuel costs. In the U.S., warning signs are emerging. Consumer spending is expected to weaken, while the housing market remains subdued amid high interest rates. Some forecasts suggest the S&P 500 could correct by as much as 30% if growth slows sharply. In Europe, policymakers are also on edge. If energy prices remain elevated, the ECB may be forced to hike rates further, increasing the risk of prolonged economic slowdown. The key trigger now remains the duration of the conflict and the pace at which energy supply disruptions are resolved. Business Bureau Report, WION World is One.